Point there. Let's talk about one thing that could derail this market. What would that be? Of course, housing. In bond land, though, there are glimmers of hope. Prices for Fannie and Freddie debt are at near record levels relative to treasuries, and that may indicate there may be a bottom in housing. Not to our next guest, though. Peter Schiff is the president of Euro Pacific Capital, author of Crash Point 2.0. He joins us here on set, so we can yell at you in person. Peter, why not? Why don't you see a recovery in housing?
Remember, the only reason that Fannie and Freddie debt has a bid is because the government has guaranteed it. You know, a couple of days ago, there was some talk that maybe there was no guarantee. I think Charlie Rangel might have said something, and they quickly sent the Treasury official out there to say, no, you got all the protection of the U.S. Treasury. So that's the only reason people are buying those bonds. But this is a big deal. You know, there are only two props right now in the housing market. One is government guaranteed mortgages, and the other one is artificially low interest rates, and neither one is sustainable. I mean, we have to get rid of them eventually. I think it's going to happen soon. That's one of the reasons, you know, the Fed talks about their exit strategy, but they don't actually plan on doing it because they can't exit without tumbling the housing market, and that will take down the economy and the market with it.
So what is the play off of this? I mean, is there a play in the housing market from your view, or are you just going to say gold?
Well, I mean, it's always a good time to own gold.
Yeah, but we know that. Okay, but getting back to the housing market,
we have to understand you can't have a housing market where the U.S. government or us taxpayers, as you just said, co-signs everybody's mortgages. I mean, that leads to the irresponsible behavior. Housing prices have to be a function of the supply of houses for sale and the number of buyers who can actually afford to pay for them without government help. And based on that criteria, housing prices have to come down a lot more. And when they do, it exposes all the bad debt on the books of the banks. The banks are basically insolvent. The government's going to have to bail them out again. And, of course, the Federal Reserve has $1.5 trillion worth of this stuff on its balance sheet. It's trying to figure out how to exit that. It can't because there are no buyers.
Pete, I know you do work on this. Do you do work in terms of the foreclosure shadow market that might be out there in terms of what that could mean to the housing
it's huge
market?
Because a lot of the homes that have been foreclosed on, they're not even up for sale. The banks are keeping them off the market.
So how do you make a trading thesis based on that? Because I happen to agree with you.
Well, the thing is, you don't want to buy any housing-sensitive stocks. You don't want to, I think a few of the brokerage firms recently upgraded some of the home builders. That seemed like a lousy call to me. You wouldn't want to be in a
Home Depot or a Lowe's. I mean, there's some positive sentiment out there on a Home Depot.
Yeah, well, you don't want to own any companies that are retailers. I mean, part of the long-term correction for the U.S. economy is we've got to stop shopping, right? We've spent all our money.
So
We're broke.
Are you short any consumer discretionaries?
No. I mean, my strategy is not to be short U.S. stocks. It's mainly long foreign stocks because I do see a rather substantial decline in the value of the dollar. And so from that perspective, you're better off being long international stocks than short U.S. stocks. But you can certainly spread stocks if you want. You can be long multinationals and exporters. You can be short domestic type stocks like home builders or retailers or financials. That's a strategy that could work if you're trying to do that.
Peter, let me ask you real quick. Here we are, 1 year anniversary of a great rally, generational type of rally. Would you at least acknowledge, and I get the fundamental story, and I kind of agree with you, this is artificial stimulation, but the last year, the support of asset prices, doesn't it basically tell you that they can keep this going? And the investor watching, sitting on the sidelines, why not follow along when the government is basically telling you, we're going to support asset prices, they could keep it going for a little bit longer?
That's what they are doing. I mean, I own assets.
But do you acknowledge that they
reason.
could keep doing that and equities in the capital markets keep going higher?
Well, not without completely destroying the dollar. At some point, they have to decide, do they want to protect the dollar or do they want to keep inflating this bubble? But the only way they can keep asset prices rising is to debase our currency. But in the long run, that doesn't help anybody if you have more dollars that have less purchasing power, and it ultimately destroys the economy. People look at interest rates from the perspective of the borrower. We all want low interest rates because it helps the borrower. Well, what about the lender? What about the saver? These guys are getting destroyed in this relationship. You can't have an economy that doesn't reward savings because you have to have savings. That's where economic growth comes from. That's where capital investment comes from. And until we're able to raise interest rates, we can never have a real economy.
We got it. You're going to be with us for the rest of the show, so we'll check in with you a little bit later on.
Don't leave.
Peter Schiff, do not leave.
You got me stuck here, I guess.
Do not leave. All right. Let's talk about technology. We've already seen a nice run in Citi shares. They're up 7% today. Do we see it going higher tomorrow? Karen, what do you think?
This is interesting. I don't know why they're doing this now. If they want to take out some common, it's. I guess it would be higher. There was a little news about they were selling some real estate to Apollo.
Right.
I don't know Probably the trend is higher. Now that I don't own it, I think for sure the trend is higher.
And you'd have to be encouraged by the idea if they really were oversubscribed, which was something that was being floated around the street all day long. So, you know, at that level and underneath 9% yield, that's pretty interesting.
Peter Schiff, you're back here. Isn't this a good sign that banks are able to do this?
Look, I don't care if it's oversubscribed now. People might be trying to flip it. They think there's a trade here. But this is, anyone who's watching this show, if you're actually a long-term investor, don't even consider buying the stock. There's no way this company can survive. It's going to have to be constantly bailed out by the government. There's going to be no dividends really long-term for shareholders. So there's no reason to get involved.
So, Peter, would you buy a J.P. Morgan, a Morgan Stanley, a Goldman Sachs instead?
I wouldn't want to buy any of those financials. Look, there are financials outside the United States. There are companies that are actually solvent, that are making profits without taxpayer bailouts and guarantees. I just would not want to be invested in any of these firms. If you can get a job there, fantastic. You get a job at Goldman Sachs, go for it.
All right.
Because you can make a lot of money. But the shareholders, the owners of the company, they're not going to make anything.
I love how Peter Schiff just, you know, you come on here and you tell all these investors who bought $2 billion worth of shares just in tomorrow's market that they're going to be dead wrong that they're going to go to zero.
Well, they have very short time horizons, and a lot of these guys, it's not even their money.
Good point.
So
BK out there in the prop desk, you actually doubled down on Citi today after a 7% rise. When did this happen exactly?
No. I doubled down back in February when we had some of the news coming out about some of the bigger shareholders. But the one question I have for Peter is, why wouldn't you want to buy this stock? I don't understand that. The government's going to bail you out. You have a built-in put option. This is the greatest trade ever, as far as I'm concerned.
They don't bail out the common shareholders. They bail out the
They did already. They're going to do it again.
No, they're not going to. They're bailing out the creditors. They bail out the employees. They bail out their bonuses. The common shareholders, there is no political constituency to bail out the shareholders. They're the ones that always get left holding the bag.
All right, gentlemen, I got to blow the whistle. I got to blow the whistle on this debate because something tells me we could have this discussion well into the night if we wanted to. All right, more Fast Money up next.